Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 22nd of January 2026. My name is Richard Lee and I'm managing the stockradar.com.au website for you. Well, a bit more of the same this week. We had a little bit of a blip just to shake us all out a little bit yesterday, but we're back again today. Typical of a bull market. We're seeing a bit of selling across the major indices, but it's not seeming to stop the markets. We'll have a look at those in a second. But there's one thing I want to talk about today: exploding your trading skills. I'm always trying to give you a little bit of a tip about how to eradicate certain things from your trading, the mistakes you make, and how to try and fix some problems. But today I want to talk about exploding your trading skills with a simple but very important change. I'm going to talk about that in trading tactics after the ASX Stocks review. Okay, so firstly, let's get into the trend intensity rankings and see where they are at the moment. Again, it's a bit more of the same. We've got some different stocks here. I've actually got what have I got? 50 stock picks at the moment. Of those 50 stock picks, some 20 of them are rating at 10, and guess where those sectors are? 90% will be in the metal sector. There's just a couple here in the industrial sector as well, which is always a little bit of interest, because that industrial market, as I say, has been looking very bad at the moment. So we go to ALQ, which is the first one off the rank, which is a great stock. We've got Whitehaven, which has roared back in there. So is Stanmore. SGM's making gains. S32's doing really well. Mineral Resources making new highs yesterday. Liontown, Downer EDI, Mineral Services. And then BHP is up to testing its highs at the moment. And ANZ is still rating a 10 there of all the banks, despite CBR, I think, closing down near 145 yesterday. So ANZ's holding it pretty well. So there's your top 10 intensity rankings. Again, we don't anticipate things. We don't try and line things with sectors. We try and take stock-specific notice of what a stock's doing and how it's behaving, and that's how we behave. Bottom up is what we do. Okay, stock picks up to this week to 50 stock picks. So there's 4 in and there's 2 out. So again, the rotation continues. To keep an eye on all those stocks going in and out, you need to subscribe and go to the Trading Centre, which has all the entries, exits, map of the market, all the stocks we cover and the stocks we hold, and all the breakdown of all the different sectors, all the trends, all the stocks, all the entry dates, exits, stop losses, all the information you need to make informed decisions based on price analysis, which is what we use to guide ourselves in stocks through the stock market. Shark-infested waters, I like to call them, because they are sometimes. Okay, so that's your stock pick update, and there's your trend intensity ratings, your top 10. As I said, there's a lot more top 10 trend intensity ratings at the moment. The portfolios are all full again, and now we go straight to the overseas markets, which again, not a lot has changed there. Let's go first to the Dow. And here we are again. Well, it's reversed its gains from yesterday. Again, the trend is up. Volume's okay, and I just want to heighten the fact that there are selling occurs. A few big red bars here, so there is selling in there, which is again probably not a bad thing to try and solidify these gains. I don't want the stock market going vertically on one bit of volume. If there's a bit of selling occurs, it's just keeping the market real, which is probably a good thing. Even though we are into that stage where we're looking for a fairly decent correction, it's got to be coming soon. But for the moment, and we're not getting any real warning of that, apart from a little bit of selling, which is in the market. Some people are offloading some stocks. S&P is the same. We can just see a few red bars down the bottom down here, and as well as green bars, of course. Momentum has slowed a bit there, but the trend still remains up, and that's what we're talking about. The main thing we look at is price, and we've got high highs and high lows. The trend is still up. The other indicators are useful. They're warnings. They give us an idea of what might be happening. Momentum slowed, a bit of selling there. So it's warning us of things that might be happening. But for the moment, the trend is still intact on all the major indices. And even the Nasdaq, which is probably the worst of them all, it failed to make a new high since November. And it's got a little support level down here. We'll just keep an eye on there. A bit of selling occurring. And again, like the S&P, momentum has gone right out of that. For the moment, well, it hasn't gone out of it. It's just slowed its uptrend pace, which is what this is. It's a measure of acceleration and deceleration. This is fast acceleration. This is slowing acceleration, although it's still going higher. So So that's the major indices. That's what they look like. Not a lot of change there. Our market, well, it's just trading between a bit of a range at the moment. We may be looking to challenge those highs. We came back a bit yesterday. We're back up again today. Let's see how we can do today. See if we can take this market on again and see how we go. Okay, and then we've got gold, which of course is just roaring and still roaring. How far can it go? We probably asked a question down here. We probably asked a question here, and we're still asking it again. Who knows where it's going to go? We don't know. We follow it because it tells us what's going on. There's buyers appearing. Momentum's good. It's above the average, so the trend is up. So that's what we follow. And for the moment, we're just simply raising our stop. If we were trading gold, that's what we'd be doing. So from this new high here, back in October 23, it really has had no corrections hardly at all of 15% or more, and it's just continued high. So gold has been an amazing run, and as we know, silver is also doing that. Copper's getting on the back of things finally. Hasn't done much for the last couple of weeks, but it has held its gains, which is a good thing. So we're keeping an eye on copper. Again, a little bit of selling's appeared there. Volume's improved. Momentum's okay. It's above the average. And we're testing these highs at the moment at R1. So copper's still looking okay. I guess for the moment we can just draw a little sort of squiggly line up around here. Somebody gives us an idea of the trend at the moment, and that's what we often attach that to the moving average, which often runs alongside the trend line, which just adds a little bit of credence to the whole thing. But copper for the moment is going up. It looks like it wants to go higher. Brent crude, well, we'll have a little bit of a closer look at this in the newsletter this week. Things are starting to happen there. We've hit this bottom again and held. We've got a bit of volume occurring. Now we're really looking to the upside to see what sort of damage it can do there before we get too excited about what Brent crude's going to do. So there's things to look for, but nothing really saying this market's going to go crashing higher at the moment. So there's your commodities at the moment, and we know things like lithium and iron ore is a bit better at the moment. So things are going pretty well in that sector still, and these stocks are running mildly. I'm going to go through a couple of stocks, not many of them, but if you look at the trading centre, of about 25 metal stocks I think I probably hold about 22 of them at the moment, which is an enormous run. So we're making all those stocks like Emerald, Capricorn, and all the gold stocks, we're all in there, and they're still running high, so we're just raising our stops on those stocks there. So we'll go through a couple of other stocks today, just to give you a little bit of a look here. First with the base metals, we know Sims Group's in the top 10 ratings, as is South 32, and we can see why that is, because it's very quickly reversed its trend nicely here. We've got the cycle high here, the cycle low down here. We've got a little double bottom there. We get our trend reversal here. We get our switch zone, moving average, horizontal line, downtrend line through here, and that gives us the evidence we need. Then we get beautiful volume pushing this stock high, and it is still pushing it high. This is a change. This is the leverage we look for when we get a sentiment change. All of a sudden the sellers are going to get out of the market, which means they're going to buy themselves back, and added to the fresh buying, you get this wave of movement. How far it goes, we don't know. The next resistance is up around probably $5.30. Current price is about $4.18 at the moment. So looking very good, South 32. All these stocks I'm going to show today will all be top 10 trend intensity ratings of 10, which means all systems are go. Okay, so that's South 32, which looks nice. So this is what we do. This is how we base our trades, where we get our entries and why we're not in certain stocks. There's a lot of stocks. I think at the moment it's really important to not be in a lot of stocks, whether it be your beautiful health stocks, your Sonic Health, your CSL, or lots of other things like your retail stocks and JB Hi-Fi, things like that. The opportunities will come, but not right now. So we'll just wait for those stocks to fall into our arms at some stage. But for the moment, we've got some other stocks to focus on. And this is what we try and do. It's what I'm trying to educate people on what we look for when we're looking for a change in trend. And then what we do, we follow the trend. We don't predict it. We just follow that trend as it moves, because we know trends occur all the time. Now, interestingly, Newmont is an interesting stock, and it has had 3 trades we've had since 2024. So although you might say, well, it's nice to be in there all the time, what we're always doing is protecting against the downside, because we never know when it's going to happen. Thinking CSL, thinking SHL again. I can think of lots of other stocks. It might even be CBA. But the price we pay to be insured against those things is we protect our gains, okay, and we turn neutral because we don't want to be caught in the downdraft, which can never end sometimes. So that's the price we pay. So it may look a bit odd, this sort of thing, but we've got 3 trades here. They've all made good money here. This trade is a 12.5%. This trade here from the new high was 46%, and we're currently on about a 49.8%. That might even been added up for a calculator for this one as well. So although we've got 3 trades there, it's how we do it. That's what we do. We trade trends, and when they come into doubt, we get out. So for this one here for Newmont, it has been an amazing stock pretty well since it's listed. It's its new name under Newmont, and it's done incredibly well. And as you can see here, just some new highs. These are all simply new high trades. Nothing special about them at all. And that's what we do. We buy a new high and we protect it with a stop. Trend intensity rating of 10 is for Newmont. Again, I could squeeze this up if you like. And I'm not really too worried about all the other indicators at the moment because the trend is up, it's solidly up, it's above the average, momentum is fine. Volume is a little bit hard to read here. It gets a bit thinner as we go higher. It's very harder to get stock. So for this week, we've had to bid the stock up from 160 to 180 to get a little bit of stock, and that's what I call a shortage of stock, chasing, so it's demand chasing, not much stock. So that's where Newmont is at the moment, and looking very good. Again, where it goes we don't know, as is with gold, but we'll just continue to follow this high with our stop loss. BHP, the big one, which has had a pretty good week the last couple of weeks. Finally, we're starting to get a challenge to these highs. Finally, we're starting to get a challenge of these big highs up here at around $50. Okay, so it's moved off that support zone pretty well. We watched this fairly carefully. We took the trend reversal, we took the trend reversal back here, and it's now raised strongly back up to 150. Gee whiz. And so here it gets very exciting because once we get above $50, we're getting into new high territory. And for a stock like BHP, which is probably one of the best asset holders in the mining sector, and it's just a very, very big stock. They're very, very smart. Potash probably hasn't gone quite the way it wanted to, but it's a long-term view, and that's where they are. But they've got plenty of copper, and copper's running very nicely at the moment, as is iron ore, which has flattened off a bit, but still they're making good money out of it. So again here, a bit like I talked about last week, we can make sure the upside is unlimited, but we limit the downside, and that's clearly our strategy because we don't want to take losses, because if we do, it hampers our returns. So in this situation, as I said, we hold BHP. We'll tighten the stop as we hesitate towards this $50 area, but for the moment we're quite excited about it. Hopefully it's going to move through there and have another nice run. And you can see the volume here through here has all been very, very solid throughout this run. So plenty of demand, plenty of good price acceleration, and moved away from the average. So it can come back a bit without doing too much damage, but we may just take this run. That may be it for the moment. It may not get through, but if it does, we'll be there. Okay, so that's BHP, looking pretty good. As I say, all the signs are go. Again, another stock with a trend intensity rating of 10. I mean, all signals are flashing green. Evolution Mining, again, just some of these gold stocks have just blasted the last couple of days, which has been quite an exciting move for those who are holding the stock. Again, we've had two trades in here since late 24. This has been an 89%er. This is a 38%er without that one in there as well. So we're probably up nearly 50% at the moment. Just simple 2 new highs. That's all we've done. We've taken the highs. We've worked with the stop. We haven't had a 10 or 15% correction all the way up there. So which means we maintain in. Sometimes we tighten the stop a little bit. If we get that hesitation towards resistance, and that's fine. We're just locking in more profit. And if we have to stand aside, we will. And we have to buy a new high, we will, which is what we've done here with Evolution. We saw this sharp chip down. It took a little bit of a wobble for a few days, took us out. We just locked in our profit. It's turned around and gone back up. We buy the new high. That small area there is the price we pay to not be involved in any big downward move. And that's how we work. Okay, so it's a really important thing to understand, that the strategy of trading and how it works, because our main premise is not to take any losses and not to hang on to drawdowns. We just don't do that. We prefer to get out and move on. So Evolution Mining, again, it's kicking high nicely with all those gold stocks. Now, one stock I've got for you now is an interesting one. Now, we've held this one for a while, and it has been going sideways for almost almost a year pretty well. Just fiddling around, had a great rally, great volume, fiddling around. Then all of a sudden it stopped. The sellers have held, and this is one of these situations where a stop doesn't go off, but the market goes sideways. It doesn't go down. A little bit frustrating sometimes. Some people prefer to get out and wait. But for the moment, we have been waiting through all this. Maybe we've taken a little yield check here and there, which has always been good. But now we're getting a bit of a wobble below this S1 here, which is a bit of a concern for Telstra. Like Sigma, it's gone sideways, hasn't gone down, hasn't gone up. So we're very wary of these stocks because they can't seem to get their movement again. I mean, if it broke through the new high, yes, but it hasn't done that for a while. And now it's starting to wane on the downside. And we can see here we're now starting to get some selling. And also this momentum has gone right out of this stock. And now we are now starting to challenge below this moving average. So as of last week, this trend intensity rating was +7. As of next week, we don't know where we'll be with Telstra, but I can tell you here, this is not a very good move when we see this breakdown here. This is not the end of the week. By the end of the week, this can still close up into here. So we've got to wait till the end of the week to be sure. But for now, it looks like it's having a bit of a wobble here, and we are seeing a little bit of a change in our price action here. So trend intensity will probably slip again if it doesn't break down this week. So that's Telstra. Keep an eye on it if you're holding the stock. It may not be a good spot to be over the next few months. So that's Telstra. AGL Energy, we'll just capture that one again. It's actually working out fairly well. Not fairly well. It's sort of behaving like a bottom should behave. We get a big sell off, big volume. That's the last gasp sell off. We then get some good buying, which pushes the stock higher. A little bit of selling enters the phrase. The stock gets higher. Then we get resistance. It starts to come back again. Now we're in the position where we're looking for that higher low or double bottom down here to suggest we might be seeing a bottom, and then we're getting a run back up towards this $12 area. So by no means certain yet. There's still plenty of selling out there. Downside pressure is eased, so things are turning, things are getting better, but they haven't given the signal yet, so we just have to wait and watch. Trend intensity is still -8 for AGL Energy. It's a quick one. Okay, probably the start of or the end of November. 3 tips we put into the Stockradar, the Radar newsletter, which came out at the end of November. One was a Gallium lithium when it was still trading at around 20 cents. It's now at around 45 cents. So we can see what's happened here fairly clearly. This has gone up in very, very quickly. And I know lithium's gone up, but it really was. We've got a very good base built down here by lithium. It then broke through here, but we had all the evidence as well here. We had a resistance point here. Okay, we broke through this resistance point here, which is the high between the two lows. We had volume starting to pick up. It broke above the moving average. Then we get that trend reversal pattern here above the horizontal line. So trend intensity rating has been 10. This has been an absolutely star performer, going from 20 cents to 45 cents. So over 100% rally in a couple of weeks. That's what they do. But we need to make sure we protect this. So we've got there with our stop. The other stocks we looked at were also Metals X, which if you have a look at that one has gone through beautifully. And the other one we tipped our subscribers onto was Capstone Copper, which has also not been quite the mighty one. There's Metal X and Gallium Lithium, but it's certainly moved higher and looking very interesting. So we always try to add a little bit of flavour in our newsletter, just for people who want to have a little bit of a play outside the top 200, because there is some fun to be had out there. But we need to be very careful because it is a higher risk environment. But the rewards can be pretty good if we get on the right side of things. So that's Gallium Lithium. It's done very well for us, and we just raise our stop on that one. Okay, so that's all the stocks I've got for today. Just trying to give you an idea of what I do, why I'm in the stocks I'm in now, why I'm not in certain stocks, why I might be looking right about certain stocks like Telstra. So just to give you an idea of what a trend follower does from day to day and how he looks at the market. Okay, so let's get into the trading tactics, which is really about what I said before, exploding your trading skills. And really, it's a little bit about, there are a few things in there. One word I use a lot is discipline, which is a real key operator. And involved in that is what I call doubt. Doubt is a big trading weakness, and we all have it. We go into a trade and we wonder. The little man on our shoulder goes, what about the dividend? What about the PE? And all those sorts of things. So really what you've got to do is you've got to be able to focus, and you know how well I focus on my momentum, my moving average, my volume and my price. That's my key indicators. That's all I need to make the decisions. Too many things and I get confused, or you have more room for error. Keep it very, very simple. Just decide what you're going to do, how you're going to do it, and do it. So doubt is a big trading weakness. You can't have it. It doesn't work. Okay. One simple change can change your trading outcomes very, very quickly. Okay. When you get a signal, you take it. Doubt is one of the single most common causes of failure and missed trades. People say, I'm not going to take that, especially when you get trend reversal from the bottom, so be South 32. It's come down for a long way and all of a sudden it turns around and you think, gee whiz, I'll get my signal, well, should I buy it, should I not buy it? Well, you do if your trade plan says so. So it's important that you don't have that doubt, you just go for it. So maybe it's time for a change for some of you. Did you miss this trade or one like it? This is Sandfire. Extraordinary trade. We did have a couple of tries at this one, so sometimes you will take losses to get it right, but we always minimise our losses and make sure our upside is unlimited, which is what's happened with Sandfire. So I'm not allowed to miss this trade. If it's in my data universe, which I cover, I have to take the signal. Okay, so that's Sandfire. Don't miss a trade. We need these rules to guide us. Okay, we need trade plan rules to guide us, because what happens up here is not necessarily work with trading the market. We need to be very physical, unemotional, very rigid, very disciplined, everything, all these things that a trade plan does, because it doesn't have that emotional weakness tied to it, so it's important. So we need these rules to guide us. We use a trade plan to protect us against doubt, the trading killer. So by using a trade plan, you are eradicating doubt, and that's very important. So Stockradar's guidance: take all signals from your defined data universe, whatever it is, 30 stocks, 40 stocks. Mine's 160 because I'm a commercial enterprise. Take all signals from your defined data universe until your money runs out. So your portfolio size is only going to be a certain size. You've only got finite amounts of money. So if you've got $100,000, you might have to divide that into 5 to make a 5-stock portfolio. So each stock is going to be 20,000. Once you've got those 5 stocks, you're full and you stop. And one of those comes out, you can add another one. This is what I call control. This is how you control your portfolio. So we take all signals from our defined data universe until your money runs out. Then you can't buy any more until the stock exits. No room for doubt or anything like that. So that's just how you do it. That's what you have to do. Doubt is a trading weakness. Like all things at Stockradar, trading is a set of controlled processes. All the decision-making processes are controlled. This completely controls and eradicates any doubt you might have. Okay, it's not a matter of not having doubt, it's a matter of getting it out of all your trading signals you're using. So you can have doubt in here, but not doubt in your trading plan. Stockradar's 5 and 10 stock energizer portfolios are examples of these controlled processes at work. Now, we had a very tough time for a couple of years, but I always knew that the stock market would go up because that's what it always does. In the words of Peter Lynch, every 6 years, you 25% pullback, opportunity rings. And that's what happened with this. And we've just ridden this metals boom over the last couple of years with an amazing run, and it's just been extraordinary result. But I didn't do it, my trade plan did it. It told me what to do and where to put my stop and what stocks to buy. So, you've got to know what you're going to buy, okay? And you've also got to know what you're going to sell. So it's important to know why you buy, then you'll know what to buy, why you sell, what to sell. So all these rules are very, very important. And this is the eventual outcome, because that's what you want in the end, is the outcome. So all the work you do generates the outcome, but you've got to be focused on what your processes are, not what your outcome is. Okay, so this is a little bit about doubt and trading weakness, finding how these portfolios work that we run and the rules that govern their trading. So in the first year of a portfolio service, it's an expensive year for you, but it's what I go through. I try and make you understand the processes, how to control your risk, how to limit your exposure in certain areas, lots of things that you need to have. They're just rules that you live by, and they're not ongoing decisions you make every time you trade. Okay, so if you want to have a look at those, stockradar.com.au is probably the place for you. Okay, so that's about all I've got for today. What's happening? This is my beautiful disclaimer. You can have a read of that if you like. What's happening in Stockradar? Well, there's some new data items. They're in the trade plan in the trading centre. I think this week. I'll update them next week. There's about 8 or 9 new ones for this year. I took out about 2 or 3 from last year, so our pool grows to 160, which is good. So that's about all I've got for today. Don't let doubt enter your trading environment. Keep it simple. Be assertive, confident, brave. When a signal is triggered, it doesn't matter what you think. Let the plan do the thinking for you. This makes your life a whole lot easier, and that's the way it should be. That's what I'm trying to do, generate outcomes for you and also make your life easier, because you're not wondering every trade you go, you're not having doubt, you're not having should I, shouldn't I, you're not having stress. No, thank you. That's not my way. I'm a weekly trader, not a daily trader. You don't need to be a daily trader. A weekly trader gives you perfect perspective for the market. And if we take things easy and enjoy ourselves, then life's pretty good, and the stock market will reward you for that sort of thing. But your behaviours must be good. The discipline, the doubt, all those sort of things you need to control. Okay, so watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week for another round of Stocks on the Move. See you later. Bye now.